any investor can do when they're thinking about safety is how much money can you put into cash. I think that's the first thing that you can do. The second thing is, what can you do to hedge? So if you honestly believe that you live in a country that is oil dominated, right? Let's just say you live in Saudi Arabia or somewhere like that, then what should I have to offset my high oil exposure? Maybe I should buy some alternative energy. Maybe I should short oil futures. Like, what can I do to hedge that? So that's right away, cash and hedging. The third is, what can I hold that zigs when everything else is zagging? Or when everything's going down, this will go up. So something like Bitcoin has generally been a low correlated asset class. The problem with globalization, and Biden is coming in and he's very much in the globalized side, where I'm not saying Trump was anti-globalization, but he was trying to support the little American guy who lost his job because it went to somewhere overseas. So if Biden is going to promote international cooperation and globalization, then there's a concern. There's a concern that everything will zig and zag together, and what can you have so that it will kind of protect you when things are going down. I'm not saying Bitcoin is the best thing out there, but is everyone going to start being long VIX futures? Because that's a good diversifier, but that's not for everybody. So these sort of tools, Bitcoin and VIX, they're like multivitamins. You can have a lot of meat and potatoes, which is your stocks and bonds, but when things go bad, you kind of have to make sure that you exercise, don't smoke, took your vitamins. These other things, gold, Bitcoin, VIX, you don't have to have a lot of these, but just enough that you don't get into trouble. When February, March, April came and the market tanked, I'm sure a lot of your viewers were kind of watching, oh, travel's going to get hit. Let me look at Carnival Cruise Lines. Let me look at the airlines. Let me look at the hotels. And they were getting slaughtered. And actually, if you bought those at the bottom of March or April, you would have made a ton of money, right? You would have thought to yourself, oh, a lot of people are going to work at home, so I should look at anything that's related to cloud computing or anything that's work from home sort of technology, especially online software. If we're back now at a market high, which we are, and for whatever reason, the vaccines don't work as well, or they're delayed, or there's not enough earnings because the prolonged impact of the pandemic, whatever it might be, I think it's safe to say that we're somewhere closer to the market top than we are at the market bottom, right? Also, don't forget, the last 40 years has just been a straight line up. Global financial crisis and the tech crash were very small things, but from the early 1980s, the stock market was considered garbage, and fixed income or interest rates were in the mid to high teens. Now we're the exact opposite. Stocks have never been more expensive, and bonds basically pay you zero. So it's the worst place you can be. So if you think that because of that, there's a greater probability of market calamity or market coming down like it did earlier this year, I think the best thing that investors can say to themselves is, what is my shopping list? So if I were to have more cash, right, then the only decision right now is how much should I move to cash or how much should I hedge? But once you've made that decision, you're not going to be in cash forever. Do I want to buy more Tesla, Google, Netflix, and technology? Alibaba, JD, Baidu, etc. Or do I want to buy more consumers, basic consumer stuff like toilet paper stocks or Procter & Gamble kind of stocks for safety? Or is there something else? Bitcoin, gold, something like that. I think if you have a highly diversified portfolio based on what you think matters, tech for growth, certain stocks to play the pandemic like consumer staples, and diversifiers like gold and Bitcoin and VIX, I think you're building a pretty good shopping list. It's like when you go to the grocery store, you're not just going to pile a bunch of meat into your cart. You're going to get a little bit of meat, a little bit of vegetables, a little bit of this and that. That's the right idea. And so the question really is, what's on your shopping list for next year? And I gave a few ideas. The younger generation definitely is different, but they're sizable. There's just a lot of them. So the question is, are they going to buy a car? Not if they can just simply have Uber on their phone. Are they going to buy a house? It's very difficult to buy a house in, like where I'm in Toronto. It's just very expensive, despite low interest rates. So we could have behavioral change in the consumer where the smartphone and apps dominate. Does that mean they're not going to buy Teslas? No, they're still going to buy a lot of Teslas, but we are in a tech-driven global economy that has some good. So innovation generally is good, But then the problem is many will be left behind. The labor economy cannot support millions or billions of people in the tech economy. The whole point of tech is to have efficiencies so we can have automation and robots doing stuff so that we can do something else, something that hopefully we enjoy. That doesn't mean higher employment, probably means lower employment. So that's a big concern. I think that for a lot of investors who are thinking, yeah, I'm just going to pile into a lot of tech. I know in China there's a lot of Chinese tech funds now, same here. That's probably going to be a problem. When you have concentration of capital that is not so widely distributed and diversified, you're going to have big problems. Governments will want to tax them because they're getting too much favor from capital flow. So it's not good for everybody. Now, in terms of the general big picture of investing, I basically believe that alternative investments is a place to bias, because if you put all your money into the stock market and there's just a big flow into tech, well, it's going to be volatile because people are going to overdo it, and then tech will crash and it'll come back just like 2015 in China. So I think either people will have to learn to market time, which they're not good at, or they'll need to diversify into things like gold, Bitcoin, and other alternative asset classes to sort of buffer the volatility of their returns.